Welcome back to the channel, folks. This is Jason, host of Fighting Words Financial, and today I wanted to talk a little bit about the world of special purpose acquisition companies, or SPACs, and IPOs, and direct public offerings, and all that stuff that's going on right now, particularly in the fintech space or the financial technology space. There's a lot going on, and I'm just going to cover a few companies that are going public here in the next couple of months. Some of the ones that I think are the most important. So I guess the most important one that we should cover right off the bat, actually it's probably the most important one in the public eye, but at the latter part of this video, I'm going to cover what I think is actually the most important fintech IPO so far this year, and probably for the rest of this year. It's just not very obvious, but it is definitely the most important one. So, but right now we're going to talk about Robinhood, because Robinhood filed paperwork to go public. So Robinhood hasn't determined how many shares they're going to offer and what that price range is going to be. And their IPO is looking to take place after the SEC completes, their review process. So they're doing this, of course, in spite of the GameStop debacle, and they're moving forward with this IPO. And it might seem like this is ill-timed, but one of the things that's probably going to happen is that by the time the review process is completed and the stock begins trading, many investors will have forgotten, the whole scandal surviving GameStop, just like investors forgot the Robinhood app crash on one of the most important trading days of the year last year in 2020, when the market was down like 2,000 points. Almost nobody remembered that a month after, and the number of accounts they were opening kept climbing and climbing and climbing. Just goes to show you that investors have really short memories. So it's unclear how much the company is looking to raise with the offering, and what their plans for the funds are going to be after that offering occurs. This is still pretty early in the stage, folks. A company normally doesn't publish this information at this stage. They've just filed their confidential paperwork saying, hey, we want to go public, and now the SEC is going to take a look at them. So it's also not known if the company is going to use a direct listing or a traditional IPO to list shares. Goldman Sachs has signed on to be the main advisor for the IPO, which is a good sign, of course. The trading platform last year was valued at somewhere around $11.7 billion rather. So they did another round of funding last year, and they raised about $660 million. And every time you do a round of funding, you generally get a professional valuation of your company. So last year, that was about $11.7 billion. Like I said, it's not really known what they're planning to raise, but I'm going to assume it's somewhere north of the $3 to $4 billion range, right? So Robinhood, of course, isn't the only fintech platform looking to go public this year. Through March 10th of this year already, 310 US IPOs have already occurred, and they've raised about $100 billion. This is really another year of the IPO. They're on pace to have IPOs raise about $400 billion plus this year. This really may be the biggest year for IPOs since the dot-com boom 20 years ago. Read into that what you will. So SoFi is another company looking to pull the trigger on a merger. They're looking to merge with IPOE. I've covered this in at least one video or maybe two videos. They're going to trade under the symbol SOFI. That IPO is looking to happen before the end of the month. That's at least what they indicated at the beginning of this process starting in January. In this situation, all of the paperwork has been completed, and the SEC review process has been filed. At this point, I'm not sure what the holdup is, but they are looking to go public by the end of the month. Maybe you're the kind of investor, though, who's starting to get a little bit leery about IPOs and all the SPACs that are out there. I know that I am. The fact that there are more IPOs this year than there were at the height of the dot-com boom does concern me to a degree, right? Our economy, though, is a completely different condition. It definitely hasn't outrun some of its fundamentals yet, and I do think that there's a lot of demand out there, and we aren't at full employment either, and people will start going back to work as business conditions improve. So I think, though, you may be the kind of investor, though, that's just getting leery about IPOs, because really history shows that most IPOs aren't successful. Most of them aren't successful. Or maybe you see problems with these individual fintech companies. Like, I happen to be a big fan of SoFi, but I know a lot of people who aren't. I am not a big fan of Robinhood at all, but I know a lot of people who are. So here's a way to benefit from the backbone of the fintech industry, right? The company that really forms the backbone of many of the other fintechs that you use. This company has already quietly disrupted the back-end custodianship of trading accounts, and you probably don't ever think of them, even though you've probably seen their name on the statements that you receive. So after growing their business custodianship of assets to somewhere north of $100 billion, the digital custodian Apex Clearing has also announced that they want to go public with a merger with North Star Investment Corporation 2. This is a publicly traded special purpose acquisition company, or a SPAC. So this is a deal that values this company at somewhere right around $4.7 billion. Apex is going to go publicly listed on the New York Stock Exchange under the symbol APX. So here's what makes Apex Clearing a little bit different and separates itself from the sea of all of those other IPOs and SPAC mergers out there. When they launched in 2012, they launched their company as an API-driven alternative to traditional custodians because there was this giant underserved market of fintech companies out there who are finding it difficult to get connected to the world of finance. So, I mean, this really just means that they were founded with the idea that custodianship operations for trading accounts and their application programming interface was designed to serve not these giant financial institutions, but rather technology-based fintech startups. They actually streamlined the process and made it a lot cheaper for any mobile app developer to plug into the world of trading. Larger custodians like National Financial and APL, they didn't make any special accommodations for fintechs because they already dominated this huge space in the industry, and Apex Clearing really stepped into this underserved market. So their software, along with other API providers like Galileo Financial Technologies, form the backbone of most fintech companies you may have interacted with. They form the backbone of firms like SoFi, Webull, Betterment, Stash, M1 Finance, Wealthfront, and Wealthsimple. Apex is also still growing at a really rapid rate. Year to date, Apex Clearing has actually grown their custodianship base by about $14 billion in new assets, and they serve 200 different fintech clients. I mean, they have a really wide list of clients here, and they represent more than 13 million client accounts. 3.2 million of those client accounts have been opened up in 2021 alone, and roughly 1 million of those accounts are new crypto accounts. There's still a lot of room for growth in crypto account growth in crypto accounts. I think we all know that. And so basically what I'm saying is I think we have a unicorn here when it comes to IPOs. And when I say a unicorn, here's what I mean by that. I think it's a relatively safe company to invest in. Meaning they have an established business, they're already profitable, they're sort of providing a back-end service, they're filling a need that is there and is only growing. You could spend your hard-earned money and your time agonizing over whether or not you bet on any particular fintech company, whether or not that fintech company is going to the moon or is going to crash, or you could bet on a fintech company that provides many other fintech companies the ability to interact with the world of finance. I think that in a lot of ways, instead of going out there and spreading your bets out on 100 different app companies, which 99 of them are going to fail, why don't you bet on a company that's going to benefit no matter who ultimately comes out as one of the winners in this fintech revolution. Anyway, folks, these are just my thoughts for a short video. Feel free to tell me how wrong you think I am in the comments below, but I would start looking into Apex Clearing. This is a company that I will probably look at opening a position up in pretty soon. I don't own any stock in this company now, but I probably will. Once again, though, this is not advice to go out and buy, sell, or hold any security. You have to do your own due diligence. I look forward to hearing from you guys in the comments below, and I'll see you next time.